Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, on The Money Show, we make sure that we just don't talk about investing in mutual fund, but also help you meet the brain behind these funds. And in this week's Meet Your Fund Manager segment, we have on board Ihab Dalwai, Fund Manager, ICICI Prudential Mutual Fund. We'll be talking about ICICI Pru Large and Midcap Fund with him. Let's understand all the strategies that he's talking about today. Ihab, good evening and welcome to the show. Thank you so much for joining in. And we'll be focusing on your on ICICI Pru Large and Midcap Fund, a category that investors look for to get a sense of comfort, stability, low volatility, and high appreciation. But before I get into the portfolio of your fund, I just want to understand the general sense of market that you have right now. You think the FII party that's just begun is going to stay longer? What's your take on that?
Hi, good evening. So what we've seen over the last couple of years is that FIs have been sellers in India, but that of late has reversed. There are a couple of things, reasons for this. One can be that expectations globally is that rate cycle globally as well is close to peak, and as a result of which EM and equities also end up looking attractively, especially EM equities. And that's one reason why I think the flows have come back from an FI perspective. And I feel large caps were the segment which was most impacted because of this, especially the mega cap names. And with the flows coming back, I think that segment is expected to do well.
But then going forward, now if I have to talk about the major concern, which is maybe monsoon for us, because otherwise, do you also think after monsoon, the other concern will be a larger pause on the rate hike scenario, or you think that's already taken care of and right now we have a breather as far as rising interest rates are concerned?
So obviously, monsoon would be watched very closely, especially for the rural economy, and that segment of the market or that segment of the consumption is actually not has not actually picked up post the last festive season, that is September October. So the expectation is that that segment is expected to pick up. But monsoon would be watched closely. But one point I would like to make is that irrigation has also picked up meaningfully over the last, I would say, so many years. So the impact which we used to see of monsoons on crops, production, and prices, I think that has slightly come off. But obviously, it plays a key role in terms of demand, especially for the rural part of the economy. And as far as the rate pause, I think that is something which markets has taken in a positive sense, especially for the equities market, because mind you, inflation in India wasn't as high as what we had seen in the global economies, and if we had continued increasing rates, obviously the consumption part of the economy would have taken a bit of hit, especially the leveraged consumption, which is generally housing or auto consumption. So I think it is a prudent step, so that that part of consumption is not hurt.
Ihab, what sense do you drive looking at the quarter results that have come up? And do you think the market is now going to be a very stock-specific market for maybe the last 6 months of this calendar year?
Yes. So if I dissect the market on sector basis, banking obviously has had a good set of numbers. Obviously, we've had good credit growth. We've had record low credit cost. NIM expansion on back of rising rates has also helped the banking segment. So we've got good results from the banking space. Then if I look at IT as a space, given the narrative or the talk of global slowdown or US slowdown, IT results were a bit of stock specific on a sector wide basis. Expectations had obviously come off before the results, so they've not disappointed on the lower expectations. But there are certain stock specific issues which had crept up in IT as a space. Apart from that, if I look at pharma, what some sense what we're getting is that US pricing has improved on a quarter on quarter basis, and domestic businesses have got into a reset mode because of the NLEM pricing, but we expect growth to pick up over the next 1 year. So that's broadly how and autos as well. Autos, we've seen a bit of recovery in autos as well, but going ahead, confidence of two-wheelers doing well is high. And on capital goods, we've seen good order inflows across space, which has helped the capital goods space as well. And like I mentioned, real estate has also been doing well, which has been visible in the sales number which the real estate companies have given out.
All right, Ihab, now let's move on and let's talk about the large and mid-cap fund that your AMC has. And talking about a large and mid-cap category, you have an option to invest in almost 250 companies in terms of market capitalization. Just for a basic understanding of our investors, what's the capping and exposure when it comes to large cap and mid-cap stocks?
So, yeah, just to give a bit of a history or background to this category is that this category came into existence, especially after the scheme categorization which SEBI had imposed on the mutual fund space. So this category had come up, and what the definition says that the first top 100 stocks are the large cap stocks, and then from the 101st to 250th stock is the mid cap space. And AMFI is required to come out with a list every 6 months, and this is based on the full market capitalization. It's not based on free float, so it's on full capitalization that AMFI comes out on an average basis, which are the top 100 stocks and which are the next 150 stocks, which forms the mid cap space. So from a portfolio allocation perspective, currently, like I mentioned earlier as well, that my and our team's preference is towards large cap currently. So from a portfolio allocation, the fund is leaning towards large cap. So it has a higher allocation to large cap. It would have around 55% would be the allocation to large cap. And on the mid cap side, it is somewhere between 35 to 37% would be the mid cap allocation. So the mandate requires us to have minimum 35% in both large and mid cap. So as the preference is currently towards large cap, so we have a higher allocation to large cap.
So you are one of the best performers when it comes to this particular category, and if your focus is on large cap, which means you are looking at stability, and mid cap obviously is utilized for when they have higher growth potential. But what exactly and what pockets are you looking specifically in mid caps? I have the sector allocation data also, but then if I want to know specifically about mid cap, what sectors are you looking at, and in terms of valuations, you think they are right?
See, mid cap as an index generally and is currently at a slightly higher valuation, but that is justified or market justifies it through the higher growth rate expectation out of the mid cap space. So if you look at the mid cap as a space, so there are certain sectors or segments in the market which aren't present in the large cap space. So the leader of any sector is a mid cap itself. So to give an example, auto ancillary space is an example where the large auto ancillaries itself are mid caps. Secondly, I feel that there are certain so generally in a sector, if a company wants to be a large cap, it ends up over diversifying, and it is present in most of the segments which the sector can be present in. But if you want to buy a company which specializes in a particular segment for that sector, we would have to go in the mid cap space. So, for example, like within lending space, so if you want to go into a specialized lender, like if you want to buy a gold financer, if you want to buy a housing finance company, if you want to buy a vehicle financing company, these aren't large cap companies. These are mid cap companies, and that's why if you are positive on a sub segment of a particular sector, you can build weightages in the mid cap space, and that's how that's how I approach the mid cap space. I try to find out sectors or segments which I'm positive on, but one has to keep in mind that mid cap generally are trading at a slightly higher valuation to the large cap peers, but within the entire space, there are pockets which are available at reasonable valuation as well.
What about large caps? Now, I have the sector allocation, but then what kind of companies are you interested now?
So from a sector perspective, like I mentioned, we are positive on autos as a space. So allocation to auto OEMs would be high, and also to auto ancillaries, but that comes under the mid-cap space. Apart from that, preference continues to be to private banks, large private banks. So like I mentioned earlier, though the operating numbers have been good, the expectation going ahead is not that credit cost or credit cycle is going to go up again, or the credit growth is going to come off. So if this low credit cost environment sustains, or if double digit credit growth sustains, I think the valuations in the private bank space is not reflecting this sustainable delivery of earnings or operating numbers of private banks. So that is something which I feel there's a potential for them to re-rate a bit. So private banks, autos, and pharma as a space is something which I like, and I like mid-cap pharma names, because mid-cap pharmas represents, like I mentioned, the large-cap pharmas are diversified. They're present in India, they're present in the rest of the world, they're present in US in a large manner. But if you build position or a portfolio of mid-cap pharma names, you can build companies which specialize or have a niche in a particular segment and are more domestic focused. I think domestic pharma is a space which has derated a bit, but gives a potential of has a potential of decent growth over the next 1 year, and are good ROE or return businesses.
You're giving inflation beating returns. I really want to understand, talking about a large and mid cap category, what's the risk diversification for an investor?
See, risk diversification for an investor is that the universe for the fund is not only the top 250 stocks, but the fund can also invest in go beyond that 250 stocks, but can invest to a smaller portion to that. So the universe is quite wide. The investor is not concentrating his capital in a very narrow segment of the market, because, like I mentioned, it's a quite diversified universe where the fund can invest in. And like I mentioned, that 70% of the portfolio has to always be invested in stocks which are within the top 250 stocks. So from a liquidity perspective, also the investor should not worry that is he invested in an illiquid portfolio, which, if in case his market view turns negative, can he will the prices come off, or will that impact the portfolio? So it's quite a liquid portfolio, a diversified portfolio. So I think the risk of investing in this fund is on the lower side, is what I would say, because of the diversification of the portfolio.
Will be all. Thank you so much for being on the show and helping our viewers with all the nitty-gritties of the fund. And on that note, we'll take a quick break. Post that, let's get our viewers connected, and let's help them with their financial portfolio. I'll be joined by Feroz Aziz after this break.